everyone, welcome to Weekly Market Insights. I am your RV Raju Angadi Vishwanath, a SEBI registered research analyst from TraderSet. Come, let's have a sneak into the trades for the first week of November 2024. After Diwali, we are going to see what's happening with the markets, how to plan your trades. This edition would be very special edition, as we would be seeing in our last video. I have shared you in last couple of videos back that why Nifty has topped out near 26,277. The calculations were given in our previous video, you can watch, but now I'm going to stress on the current scenarios, what to do, how to plan your trades in a simplistic way, which of the sectors are doing good, which of the sectors are bearish, how the markets would be trending. This week would be very important to watch out the video till the end. You are going to get a very good insights on the US markets, US market elections, what's happening, why the markets are trending on a corrective note, and how the markets can chop out everyone. This the fall in the next leg would be slow, as we have seen a good healthy fall in the markets, and then there could be a rise, and then the fall would start back to the next zones. Now almost all the media and everybody is getting bearish, but once we see one more leg of fall, there could be a good healthy pullback in the markets. I'm not saying the markets would scale the fresh highs. There is still a room for a correction, but what needs to be done, how we need to plan, where we need to be placed at the right point of time, at the right trades. I'm going to give you the view. Nifty is forming a kind of a triangle or a leading diagonal kind of a form. That's what we are seeing in the markets. So after a good fall on a more trading session, we have seen a triangular kind of a pattern. The support is higher, the resistance is mildly higher, so it's a leading diagonal or a bear flag again for a next leg of fall. Objectively, there could be one more leg of fall in the markets to pan out in the next week, next couple of days. US elections starts from November 5th, the Tuesday. So understand the scenarios and plan your trades with me in a very objective way, which are going to give you the high probable trade results. So 24,360 short term resistance, and the gap area 24,230, 200 becomes an important support. 24,170 and 130 below, 124 below, markets are heading lower. 24,124, the inauguration of Ayodhya temple, 24,124. Remember, mark the words. If that is broken, markets are heading lower towards 23,950, 23,879, 23,657, 23,742, 657, the step-by-step levels, and 23,657 below, 23,489 and 23,257 levels in the extreme case can be seen. I repeat the levels again for the Nifty, and I am going to write it down for you in a text format. So I am going to do also the medium term Elliott wave analysis for the mid-cap Nifty, and why the correction is not yet over. I am going to correlate and explain to you. So let us discuss it in a very objective and precise way in these markets. So let me write it down in a text format. So what are the levels, supports for the Nifty? 24,124 below, 23,913 to 23,879 is a important support. Below that, we are going to see 23,657 to 23,742, one support, and 23,489 to 23,257 levels can be seen. These are the support zones for the week for the Nifty. The objectivity and the volatility would be too high. What one need to do? Unless 24,570 to 600 levels are crossed, markets are sell the rises. 24,570 to 600 levels are decisively crossed, markets are sell the rises. If 24,124 is held on and the bounce back starts after one more rise and then the fall, then the leading diagonal could take the markets higher. So 24,124 is a very important level on the support side for this market. The objectivity is required. The slow fall might be there, one more fall, one more rise, then there could be a start of fall in the next leg. Is as of now the trend presumes for the market. So that's what we see as the chart hint. And on the upside, what are the resistance zones? As I said, in a very short term, 24 360 370 above, we are headed towards 24 4 62 24 535 24 570 to 600 levels. So 24 535 also holds to be an important level if the rise comes in the next leg, and then if from there reverses we can start falling. So that's a clear view on the Nifty based on the lot of research and Elliott wave counts. I'm going to step by step decode the charts for you so that you can understand what it is. IT index, what's happening? The correction has started. It has broken the simple channel on the downward direction. And until the levels of 41,000 to 41,250 levels are taken out, we are not out of the woods. So 41,250 has to be taken out in a faster pace, and that is not happening. IT stocks can rise and fall as well. 40,857 is a very important resistance. From there, 38,900 to now let me clear the Nifty levels as I done on the annotations. So clear all drawings. We have taken the Nifty levels. Hope you might have noted down. Now IT is a clear breakdown is what we witness as of now. The trend seems to be on a bearish trajectory, and the bearish belt or simple candle is formed below the moving average, the key moving average, that is 89-day moving average, which has broken down, and we are seeing a sell off. Now the rises would clearly be sold until 20 to 41,000 to 41,250 to 150 is not taken out. Sell all the rises around 40,700 to 900 levels would be an ideal rise selling point. And if we break the lows, 40,300, 39,000, 36 would be the next support, and below that 38,400 levels could be witnessed. Then there could be healthy pullback, and then the next leg of fall could be witnessed in the impulse decline if we would expect in the IT. So IT, the correction is on the cards. Rises would be sold as of now. The IT index is a sell. IT stocks are the stocks which could be sold on rises. I'm going to discuss the stock specific actions going ahead in the markets. Before that, after discussing the Nifty, Bank Nifty is not clear. I'm going to discuss on the mid cap Nifty, why we are expecting a bigger correction ahead. Wave 3 of higher degree might be over. The correction of wave 4 in the form of zigzag could have started in the cycle or super cycle degree, and then the wave 5 would come. Why? The exact zones after the COVID lows, an impulse advance was started in the mid cap Nifty, which we consider it as a 1. So this is 1 2 and 3 of 3 might have completed, 3 of 4 is on the cards, and 3 of 5. As it is a small correction in the second wave, the third might be a zigzag which we expect, and it's behaving in that manner as well. The mannerism is shown, and the decline, if we break the lows of 55,600, then 54,300 levels can be seen, then a bounce and then the pullback. The first leg of correction could be over near 52,500 levels for the mid cap nifty, which is below the election highs. So mid cap nifty can correct at that point, as we see the impulse advance here. 1 2 3 4 5 could be completed, and then the rise towards 57 to 57 800 in the mid cap nifty could be seen. Then the next leg of correction, the wave C could start before the wave 5. By the Feb, the mid caps till the budget, hopefully I don't expect the mid cap nifty to hit the fresh highs. The union budget, full-fledged budget, would trigger the next leg of rally, which could be the possibility for the till the next October. From February to October, we could see the next leg of 8 months rally, which could be expected. Before that, we are going to see the correction, and the correction has started from September, October, November, December. That is October, November, December, January, February. The correction, this what is that started is almost like around 24th September. So the correction could end near the Feb. So it is like a 5 months correction is what we expect. In between, one bounce would be there, one more leg decline, and advance next week would be volatile. So mid cap stocks, be very cautious on that trend. And once it bottoms out near the 10th or 15th to 20th November, one rally could be there in the mid caps. So that would be the ideal lower top rally, but there could be some good pullback, as the stocks could be oversold. Some 5 6,000 points rally, and also similarly Nifty could rally when mid caps would be a clear picture which it is giving. So there could be a correction towards 47,000 in the mid caps before the next leg of 70 to 80,000 is witnessed. We might have made a top near 60,000, 60,100, which is clearly witnessed, which the wave perspective as well as the fib counts is showing 161.8 rally. The clear concise mid cap nifty analysis with the Elliott wave counts is given. So this could be the high probable picture for the mid cap nifty, or even if there can be a quick fall, so there could be a triangular formation for the next leg of rise, which could also happen in a very shift way. I am showing it is in a simple zigzag, so the correction could take that form as well, but the decline is clear and concise is what we see. Where the counts get invalid, the alternate scenarios, unless we take 57,000 to 57,800 levels in this without any fall, the counts get invalid. So that scenario could be unlikely. Next week, initially, we witness some kind of a fall. Unless 57,000 is taken out, there could be a good fall towards 54,500. Then a bounce, and the fall could start, which could complete the wave 5 of A. Then the wave B bounce would come for the corrective advance for some time. Then the wave C fall would be witnessed. It can be very sharp if we are making a triangle in a very quick way, and then the rise and the fall could be chopped around for the traders if it is a triangle. If in that case scenario it's not a triangle, it's a zigzag, then it would be like this what we have designed. So two case scenarios, one is a zigzag, one is a triangular pattern which could happen. but this is the wave 4 correction. Still 47 to 48,300 is clearly on the cards for the mid cap nifty. Unless 57,800 is decisively taken out, the counts are valid for the mid cap nifty. And once we break this level, it gives a confirmation of 100%. 54,200 is tested. So that's the view on the mid cap nifty analysis. Quick fall there to pull back and could be witnessed, which clearly, even if this becomes the low 54,200, the wave B bounce has to come before the next leg of fall. So either 54 200 could be the support, 200 to 300, or 50 to 500 could be witnessed in the mid cap nifty. That's what the charts are clearly hinting the picture. We are on a wave 4 correction of cycle degree 3, which is completed. So PSU banks is giving a clear picture after the mid cap nifty. The retracement is good, 38.2. It has hit in a fourth wave. Completion is shown. PSU bank index could be on a secular run. 1, 2, 3 might have completed, and the fourth correction could be getting over as the initial trend line is broken. This might take some time, even if it is hitting here around 6,800, 900, and then the consolidation, time consolidation may happen for 1.5 month, and then the breakout might happen of a head and shoulders and rise, or now the rise might start immediately. In the my case scenario, I'm expecting the consolidation may happen sometime, and the rise from January only could start before the budget is the more likely scenario. So it will chop the traders around, but the trend seems to be imminent. PSU banks may not break this low. 6,200 lows should be most likely not broken is the case scenario. What I expect, even 6,500 to 6,200 range could not be broken. So PSU bank piece one can buy for 9,000 as a target. On any dips around 30 to 50% rise, at least the 9,000 to 10,500 targets could be witnessed in the PSU bank index. Our more trading picks are also PSU banks. So that is our view on the PSU banks. I'm going to discuss on the stock specific action, that is on a different note. So the major key indices which are trending, I have discussed. Auto has been correcting, the retracement has been hit. There can be a pullback. I'm not saying there would not be a pullbacks. The retracement of 76.4 has been hit. Some pullback might be there. The pullback may have started already. The pullback can be till 24,032, as it is some oversold territory, and then the fall could start back again, as or else a triangular pattern may form if it is advancing on a bullish note trajectory. So that is clearly on the cards. Now the support zone has been hit. 23 3 400 zones are very important, and if we break that, 20,800 levels can be seen in the auto index. 23 400 zones have been hit. The pullback has been started. Now where the counts get invalid is what we need to see. Let's see the chart structure on internal counts. 24,700 becomes a major hurdle now. That should not be broken, or even overlapping pattern. 24,400 levels are needs to be witnessed. Even if the pullback starts, there could be a good healthy pullback towards 25,000 before the next leg of decline if it is a pullback. Most of the results are out, and also auto sales numbers are not such great to that extent as it has been released. Maruti sales numbers, there is a large inventory. We are going to see the stock specific view, that is different set scenario. This is a brief on the auto index. I have given a very good analysis on the mid cap nifty and the IT, which is giving us a signal. We have not discussed on the PSU banks are bullish, but I'm not clear with the bank nifty counts, which is not clear. I'm not going to discuss or narrate the views. So it might be making a triangle that could be clearly on the cards. Is what the feeling might be there. If we see from highs to lows, there could be a triangular pattern which could be on making in the bank nifty. Is the case scenario what I'm seeing, as the charts are hinting again the scenario of a triangle. So we are seeing that scenario in the bank nifty where the time consolidation may happen before the next leg of fall or rise could happen in the bank nifty. Before the next leg of rise or fall which could be witnessed in the bank nifty, even a small fall, then at least these levels could be revisited, 49,200 to 48,700. Whatever happens, it's forming a kind of a triangular pattern. Charts are hinting the scenario for the bank nifty as the ABC patterns are witnessed, it will chop the traders around. So trade accordingly in the triangle before getting into the any conclusive view on the banks. Even if the wave 5 is pending, so triangle will eat the time out. IT will lead the decline, you believe it or not. So that's the index analysis. We are going to get into the stocks of the week as well as the US markets, where there are headed. Why the US markets are in the scenario, it's like a bull market and a bear market which is mixed together. We are seeing most likely a bull market correction in a high scenarios. Nifty final targets what could be there in a larger degree. Well, 22,042 to 21,800 levels can be seen. 22,600 is one scenario which could be one more possibility, while 20 23,660 is a key zone of confluence to watch out, at least 0.764. So 0.618 retracement is not the bearish scenario. Equivalence has happened from this leg to this leg what we have watched. That is why the nifty is falling. It's clearly a equivalence law of equilibrium which is witnessed in the nifty. That's what we have shown. That was the previous video what has been discussed. So that's on the nifty analysis part, where we are giving a picture in a larger degree. So 23,660 at least would be revisited even if we bounce back. So higher degree, larger degree, 24,881, 24,600, about 24,881 would be open, and 25,313 are the important upside zones in a larger degree. That's the picture overview. Now we will get into the global market analysis, then I'll get into the stocks of the week. Watch till the end, why it is important. Even commodities we are going to discuss. So gold could be in a triangle or ABC. The fall is steep. This fall, unless it is retraced 20 780 2780 to 2770 levels in the gold is not taken out. Gold is sell on the rises. Already the fall has been witnessed, and on Monday, even if we rise another 15 points, it could be on a triangle kind of a pattern, then the fall would be witnessed. So gold has reversed, the bearish pattern is witnessed. First zone is 24,770 to 780, and 2770 to 780, 2800 until crosses gold is weak. The bears will grip any rise. 2750 to 65 would be ideal opportunity for gold for 2711 as the targets. Gold also bearish, equities also bearish to rise, bonds are weak. Why? Because it's the intermarket analysis which is panning out. Bonds first they have fallen, then equities they have fallen in India and globally they have started now, and then the commodities. So bonds, equities, commodities, they tend to fall together at one certain point of time, which I'm going to discuss in a different video again. Now the DAX view, DAX has broken the short-term trend line. I'm not going to say anything else. The pullback is there. DAX has broken the short-term trend line. The two in a overlapping fashion. A negative divergence is seen. Ending diagonal could be on the cards. Any rise towards 19,500 until 19,600 is broken. 400 to 500 would be ideal selling opportunity, and once we break the zones of 18,900, DAX is going to see the sell off. So this is the pattern which we are seeing in even on the larger degree picture. US markets, Nasdaq is a clear sell. What we see, A, B, C could be on the cards. Even if we are bullish, the fall could be towards 17,500, 400 levels. That could be on the cards, is what we feel the charts hint. There could be something else which could be panning out, which could be disastrous impulse decline, but I'm not going to take that counts as of now. I'm saying these markets are giving a divergence, and the rise here is unoptimal. Even 21,100 until unless it is crossed 21,100 until it is crossed, as per this chart, Nasdaq is not out of the woods, and the decline would be very steep for the Nasdaq. Short term, what it is, 20,250 to 350 levels are very major resistance zones for the Nasdaq. The support area would be 19,500 to 600. If that is broken, clear sell off would emerge. The scenarios are 335, which is one of the most likely patterns to be traded. So that is at least on the cards for the Nasdaq. But the bigger picture is scary. I'm not going to reveal and discuss. This is not the scenario as of now. I'm not going to discuss those scenarios and make a complete bearish content scenarios. Dow Jones 1 2, this is ABC 1 2 3 4, and this could be a fifth which could have completed the Dow Jones even on this note. So this shows the picture abhi to start hua hai. So there can be a rise, but the correction is imminent in Dow Jones too. Even if you take this as the top to top, there could be a good correction which could be on the cards for the short term. Volatility would be set to rise, same like Bank Nifty, what the Dow Jones is doing, the kind of a pattern, and the trend line is broken. Nasdaq is clear for us more than Dow Jones, if the levels of 43,000 is taken out, the bullishness would start. Even if not 43,000, 42,750, 43,000, and if it breaks 41,700, bearishness would start. So that's on it. Gold I have given 79,200 is a very important resistance. 79,600 levels were seen, and we are going to see the levels of 76,700 in the gold. I'm bearish. People might be bullish, but that's my view on the gold as of now. Oh, 77,200 to 76,700 levels can be seen in the gold. That's the view on the gold. Gold has given a bearish reversal in the last week, and a shooting star is formed unless until the 80% 79 200 300 is taken out. At least hanging man would come 77 500 has to be witnessed. Even if it is a consolidation, I'm going to expect those levels to be witnessed in the gold. So that's the viewpoint. 2,800 ounce is a very important zone. Silver, well, there can be very different case scenarios for the silver too. If it is a B, C, then it is very dramatic. Else, the fall we can see this as 1, 2, 3, 4, 5, then the decline. Fifth is complete, then there is will be a devastation. ABC, then the correction again towards larger degree. $22, 22.20 could be witnessed. Else, it would stop near these levels for 31.30. So I'm going to see our 1 lakh levels have been touched in the silver. So what is happening here after touching the 1 lakh ABCD, this consolidation, the correction could come near these levels. The important zones were broken, but it closed above that zones. That is what it is called the silver. The channel was broken on the lower end, and again, but we have to witness a follow-up buying above 96,500 levels for the next leg of rally to continue on the upward note or trajectory. So as of now, I'm not going to take any big view. If we break 94,400, then it could be bearish. 94,400, 200 levels are broken. Silver could be headed for something else, which is um, a corrective decline towards the different levels, 88,000. So 94, 200 taken out. Silver is headed for big fall, 88,000, 89,000 levels at least, in a shift manner. So once we take out these zones 96,800 to 97,200, then it can get to the bullish trajectory, and the impulse would continue in a strong way. So that's commodity front again, zinc, lead. We are not seeing anything which is majorly overturning, but they are consolidating near once the resistance zone was hit. Around 300 zones which were touched in the last week. Lead is holding up, and once we cross 186, 187, lead could see the rally, and if 178 broken, we are bearish. What about the crude oil? The support zone is clearly held on 5,600 to 5,700 zones, and upside 6,400 to 6,600, 500 is a resistance zone. It has to take out for the either side view. The DXY dollar index, if this is the bearish count, 1, 2, 3, 4, 5. After all the corrective advance and the chopping out, then the corrective decline would start, and the commodities could get bullish in extravagant way. So then we have to review 103.40, 104 520 levels are very important. 480 and 527 levels are very important. 10340 breaks dollar index. Why dollar index and why the global analysis? It's very important because this gives a commodities trend, and also that will determine the markets, and the global market scenario should be defined by the inflation. So that's on the global front. Now we are going to get into the stocks of the week in a quick way. So while getting into that, if you like our video before that, do subscribe to our YouTube channel TraderSet. Also follow us on the Twitter handle TraderSet. And for our premium services, we are described in the description below. Get in touch with us for the SEBI registered advisory, multi-bagger option zeta workshop, and the live trading room, which we do provide. And also do visit us on traderset.com, where you are going to get all the details and the analytics, what we do, why we are doing all these things, and how you can gain an edge over the other traders with a disciplined manner, how you manage your risk and become a successful trader as well as investor with the TraderSet. Why TraderSet? A trader's gateway to financial freedom, a trader's gateway to success. We intend to help the retail traders from a hut to the palace. So a rise from a hut is what is our intent. With our expertise of 15 plus years of experience, a chartered market technician and a certified financial technician, you are going to get the more details about our qualifications, our research desk, about me, and all the details. So that's all the services is well description. We have got a link below on our premium services. That's on about us. Now I'm going to get back to the stocks of the week, which is important and what you are expecting. One short candidate is REC, the rise, sell, and triangle might take some time, but around 5 until 560 to 575 levels are not taken out. REC is on a impulse decline, which is ABC larger degree correction, which could take time till February, or at least till the November end. We could see these levels of 440 or 435 levels, or even the lower levels of 395 levels can be witnessed. So this is the REC chart where we have plotted the layout wave counts as well. Aurobindo Pharma could be entering a support zone or a trajectory of 1360 to 1380 important zone, where case 1325 levels could be visited in a quick fashion, and then the bounce could start towards the fresh ice is what we feel as the charts hint, and the earnings would be reported on the 14th of November. Till then it would chop around the traders, the rise and the fall. So watch out these zones. There could be a very good opportunity for Aurobindo Pharma. Then Eicher Motors, the results are on 8th Feb. What I would be expecting, the consolidation, the size of 5000 to 5050 may not, 4050 might not be taken out, and once we break 4820, we can see 4600, 580 zones back again. Even if we are bullish, there could be some reversal in the stock. 481020 levels, 5030 to 5060 would be the stop for the Eicher Motors. Could get bearish, though on the counts what you are seeing, that is what we feel. Even the positive sales numbers could trigger the sell off. So that's the bearish view on the Eicher Motors. And MRF is one more bearish stock as per the trend. The pullback towards 1,26,000 to 27,800. Even if we see that it could hit the channel lows, 1, 2, third, even third of 5 from it might not cross even 1,24,500 to 25,300, and then the pullback and then bounce, and as the mid cap ends, 1,10,000 is the target for the MRF. is what we feel. The Friday 8th November could be the results. The channel lows would be visited. Rises would be sold in the stock as the charts hint. Even if we are bullish, the channel lows could be visited for the MRF before the next leg of rise. Any bonds sell MRF for 1 lakh 10 to 1 lakh 13,000 at least as a target. Sambuja and ACC could have completed a correction as ABC decline in a irregular fashion could have completed from the 1 to 3, 4 might have completed here in a larger degree, and fifth could be headed for the fresh size of 3,000 plus zones. But 2,200 to 2,130 are the very important levels. Below that, 2,050 levels can be revisited. 2,230 and 2,180 levels are very important zones for the this corrective decline for the ACC needs to be watched out. Ambuja Cements, the similar fashion, similar kind of a trade setup is what we feel the charts are acting upon. So needs to be watched out. 560 to 550 important support as of now, and 600 is a major resistance. It has to take out the channel, and then the momentum would come. These are at corrective larger degree patterns. What to buy? The more trading picks PNB 90 to 100, we have said it would be a fifth wave candidate. PSU banks, we are bullish. Bs, we have said a buy. I'm going to share the PSU banks charts with buying opportunities. As I said, 90 to 100 accumulate Punjab National Bank, and once 114 crosses, stock is headed for 170, 150 to 180 levels, where the fifth wave could terminate. Central Bank of India, the fifth could have started, and the good pullback has started now. 62, 63 levels, so some resistance, and then consolidation towards 53 to 52 to 55 levels would be a very important support. That consolidation happens, the rise would start towards 80, 90 levels at least. 80 to 90 levels can be witnessed in the central bank in the form of wave 5. Similarly, I'm witnessing the PNB to touch the 170 levels, at least the zones of 157 to 170, the zones can be visited. Canara Bank, the similar way, 90, 82 is a very important support. Below that, one can keep the stop on closing basis. So 90 to 100 is the accumulation zone. Consolidation can chop some more time, but 150 is clearly on the cards for the Canara Bank. That's the detailed stock analysis also, and also the analysis of MIDCAP Nifty, as well as Nifty, how to plan objectively the short term part. IT is weak, midcaps are can correct. So that's the overall commodity and global market analysis. With the next update, I would be back with you. Signing off for now, your RV. Thank you, everyone. Have a happy and prosperous week ahead. Stay tuned till the next update.